Welcome back, everybody, to another episode of the Expert Trader podcast series. We have a very special episode for you guys at home. Two very special guests. We have Lambo Raul in his second appearance on the Expert Trader podcast, and a new face, Mr. Alex G. Alex, welcome to the Expert Trader podcast.
What's up, bro? Thank you for having us, man. Thank you.
Appreciate it, bro.
No doubt. Raul, it's been over a year since we spoke to you on the podcast. Do you want to talk to us about what's been new in your world? What's changed since we last talked to you? I know you added some things to the collection.
Yeah.
Do you want to just talk about the...
Well, I don't necessarily remember too much about, what type of cars I had or what my living situation was. But currently, nowadays, when it comes to my car collection, I know people are very intrigued with the value of my collection and the type of cars that I have, especially with my age, right? Because I don't think you'd really expect it. I have maybe 1.7 million in cars around there. So currently I have my Nissan GTR, which I've had for a few years. At this point, it kind of just sits as like a showcase. And I actually want to turn it into a show car, put a wide body kit, put bags and everything else. So I have my Nissan GTR, I have my McLaren 720S, I have my Urus, which is my daily driver. I have my 488 Pista, which is one of my more like collector cars, which it should retain its value or increase in the future, especially if they keep the mileage down, because that's the last model of the 488 that Ferrari is making. And especially that it's a race version, a Pista, it should hold its value. And I got it for a really good price. And actually I've already made $30,000 roughly on the car I could sell it for. And then I had my Aventador SV. So I purchased that car, and literally within a few months, the demand had increased so much on that car that I made 75 grand on that car, and I actually ended up trading it in for my SVJ. So those are kind of all the cars that I have right now. And I'm actually currently in the process of buying another property. So previously I was renting out an apartment, but I didn't really like the apartment type of lifestyle. And I was kind of not convinced, but I was more in, okay, I kind of want, my main primary residence to be under a mortgage and everything else. So I ended up purchasing the property that I'm at right now. And over the last few months, the real estate market in my area has gone up pretty significantly, especially for the type of house that I'm currently in. And I've actually made 150 grand on my house. So what I'm currently in the process of doing is I'm actually moving all of that equity plus my initial down payment, which was roughly 75 or 25% of the property's value, into a higher valued property. And I'm coming out of pocket maybe like 5-6 grand after all closing costs and everything else. So I bought this property for 830 grand. It's selling for it's already under contract for 980. And now I'm actually in the process of closing on a purchase that I'm doing right now for about $1.4 million on that property. And that property should also go up in value. I know there's a lot of people saying that the real estate market's going to crash, but in the long term, looking at that property and the community that it's in, that property is one of 3 properties. That's a corner unit that fits 10 cars, has a 2-car garage and then a single car garage. It fits 10 cars. And that property is sitting on 2 lots. Out of the entire community, there's only 3 houses that are like that. So it should really maintain its value or, go up from, what I purchased the property at. So that's kind of where I'm at with my life right now. Other than that, bro, really, I'm just kind of focusing on my trading and looking to scale up the game in terms of, how much capital I'm managing, and looking to really just move forward and, reach that next level in terms of my trading.
Okay, so this has been a very exciting year. So I'm really glad that you've got so many things going on. Congratulations on the new move again. What's crazy is the last time we talked on the podcast, you were just moving into this house.
Yeah, literally. I moved into this house last year, November.
Yep. All right, so that's kind of nuts to see the change. Alex, before I ask you a question, I'm actually curious about something, and I know that a lot of folks at home are probably going to be curious too. Raul, what really got you into cars?
Well, really, as a kid, I used to really race a lot of go-karts. I did dirt bikes. And just kind of being around that scene of just racing in general really put me into cars, but it really got me into like the car game, if that's how you want to put it, was my very first car was a Mustang EcoBoost, and I'd hear a Mustang GT fly by me, and I'm like, damn, that car is so loud. It sounds so nice. Like, how do I make my car like that? Doing more and more research, I noticed that, hey, the motor on the Mustang GT is a lot bigger than the motor in the Mustang EcoBoost. So that's how I slowly kind of got into the car games and, buying parts and everything else. And that's actually kind of also what pushed me to go into trading, because since I was being homeschooled, my initially what I wanted to do was join the Marine Corps. And since I was diagnosed with Crohn's disease, I couldn't join. So me wanting to make more money to be able to afford my hobbies was really kind of what pushed me into trading, because I saw, hey, you can make money online. And I was like, what, if I can make money online, then I'll be able to afford car parts, literally.
It's straightforward math.
Just like that.
Okay, so there's a lot for us to unpack there. We're going to go through it during the interview. You guys got a lot to look forward to. Alex, let me ask you a quick question. You just got your first supercar.
Yeah.
Did you always want a supercar, or is this something that just rubbed off on you from hanging out with this guy?
A little bit of both, man. Like it definitely like pushes you to like work harder towards what you want, and then it shows you like the reality of what can like possibly really be done. Like it was something that I did have planned down the line, but then I got the opportunity. It made sense at the moment, and it was like, you're living in it now, and I basically had the payments of the car paid for the next 12 months. So I'm like, I can literally do nothing for the next 12 months and I have the car paid for. So I'm like, I make the move, and then that only forces me to work harder, put up my lot sizes, bigger trades. And then it's definitely helped, bro. It shows you like everything that I've done, everything that I've worked for, it's showed that I'm really doing something. Because everybody, when they trade, everybody wants to get like that smack in the face, like, oh, like you're profitable now, or you're successful now, or whatever. So that doesn't really happen. So I mean, that to me was like my oh shit moment, like shit's really going down, like you can really do this, like you've really leveled up now. And then it's just, you got to consistently put yourself at newer levels, so then you keep pushing to new goals, man. So yeah, definitely.
All right, that's really dope to hear. Honestly, I like how you phrased that. You said there's no oh shit moment when you finally become profitable. So you kind of have to make your own by doing something crazy. So Raul, do you want to break down how you and Alex met?
So basically, we went to like the same gym. I know this probably sounds like so like juice head, right? So we were literally going to the same gym, and if I remember correctly, he came up to me. He's like, "Oh, I'm into trading too. I've been training for like the last 2 years and everything else." I was like, "Oh, that's dope," or whatever. And then, every time we go to the gym, then slowly we would actually start like working out together and stuff. Then we became pretty good friends.
And then I had to show him how to work out, because he was a little tweaking on some sides. And then,
Okay, so I know that you guys work together now. How did that change from being a friendship relationship to then you guys ended up working together?
Personally, I've had relationships in the past that started off as friendships that turned into business relationship, but it doesn't really work out with everybody. And I've also tried having, just business relationships, but I'm the type of person where if we can't be really good friends and really understand how we work, then I don't really think I can have such a great business relationship with that individual. Just because if I can't have a friendship with you, then we can't really go into business together. So one day, how pretty much it all started was that, Alex is a swing trader. I typically day trade. I focus on smaller timeframes. Compared to him, he focuses on like the 4 hour, the daily, the weekly. Even though time frame correlation is super important, and I include that into my day-to-day trading, I really look for intraday moves, based off the risk to rewards that I want off the market. If there's a possible opportunity, I look at the 30-minute time frames, the hour time frame. He kind of showed me his portfolio that he was up like 10-15% that month, if I remember correctly. And he showed me a track record of, I believe it was a quarter and something. And from there, it kind of just popped into my head, because a lot of people came to me to learn how to pretty much trade. But not everybody is going to want to be a day trader. Not everybody could be a day trader. Some people are into scalping, some people are into swing trading, and that's where he came into the picture. I feel like if I could just direct people to learn how to swing trade directly from him, it would save them a lot of time. Even though, yes, they still can benefit off of my content from day trading, because I don't just teach specific day trading. I teach candlestick analysis, how to read price, your supply and demand levels. When it comes down more into a swing trading perspective, I kind of just reroute people to go directly to Alex instead, so they could have kind of the best of both worlds. What kind of mentor do I want? Do I want a longer time frame strategy, or do I want, maybe something that's a little more in and out?
So I do want to go through the pros and cons. Alex, do you think that it's a personality difference, kind of going off what Raul just said? Do you think that swing traders versus intraday traders, it's a personality difference, or is it just a preference?
I mean, I believe it's maybe like how you are taught from the beginning. Like if you are taught from the beginning that, oh, you gotta like get the money fast, get it now, then I guess you kind of like stay within that mindset, and then you try to, stay within like the scalping or day trading. But I mean, personally, I've always been a patient person. Like I've always been patient when it comes to anything. I've had other businesses in the past, and then I haven't had a problem, not making money, letting the business start. But I mean, it really does depend also like on your time. Like kind of like swing trading is more for like the 9 to 5 kind of people. So I mean, pretty sure a lot of people know like the story. I used to work at Dunkin'. I used to work at the fair. So I didn't really have that much time to be on the charts during London or catch that day trading. So it kind of almost like forced me to look at the bigger time frames and catch like the bigger moves. You get me? And then it literally just turned into like my lifestyle and like who I am now. Like it's like I don't like not swing trading. That's why I have the whole set and forget, because it's literally I love catching the big moves and I feel at ease when my trades are running. So I mean, it really does depend on perspective, and then like on what you are taught from the beginning. If you're taught in the beginning that this isn't something that comes fast, then you will understand the process of waiting 2-3 days for your setup to come to you, and then you will wait 2-3 days for your trade to hit your take profit or whatever the case is. So yeah, definitely.
Raul, I'm going to swing that question right back to you about the kind of like and then we'll kind of transition to the pros and cons of swing trading and intraday trading. But do you think it's a personality thing, or do you think it's a preference?
I think it's a mixture of the individual's personality, along with what type of mindset that individual has. Because something that trading has showed me is that at times, especially when I have a lot of problems going on in my life, I'm very emotional and I can make very impulsive decisions. And a lot of the times, the charts will tell you, how you are as a person and what your type of personality is. If you're patient, if you're impatient, if you're impulsive, if you kind of just make random decisions, you're starting to take random trades. If once you start losing trades and your body goes into that fight or flight response, how you react to that. I feel like it's a good combination of both. But I also feel like if somebody wants to change their system from either scalping to day trading over time, and especially if you're a little bit more in the beginning stages because you really haven't built those habits, right, then it's definitely possible. But it's something that I feel you should address early on in the beginning, and really think about it, really sit down and plan it methodically, so you don't have to make that change later on and restart. So I definitely feel like it's a combination of both.
So you would say early is best?
As early as possible, yeah.
Okay. So let's transition to the next part of that question, which is, what do you think the pros and cons are of intraday trading versus what Alex does, swing trading?
So from my experience, I feel like the pros and cons, there's a lot. There's so many like little topics, right? I could grab, right? If I put pros and cons here, I can just start branching off and talk about so many. But really, at the end of the day, it's going to come down to win rate and risk to reward. The longer you hold the trade, the more open to risk that position going against you is going to be. That's why typically you see scalpers have a lot higher win rates, such as 60 to 70, maybe even an 80% win rate, but their risk to reward suffers drastically. They can have a 1-to-1 or maybe even a negative risk to reward ratio, right? But the win rate compensates for that. What I like about day trading versus swing trading, and again, this is just from my experience because I've tried all three, right? And I've tested multiple strategies, right? What I like about day trading is it's kind of almost an even balance, right? The win rate does take a hit, right? So, some day traders could win 50 to maybe 65% of the time. Again, it really depends on that trader's methodology, right? But the risk to reward ratio significantly compensates, right? You're looking at maybe 1 to 1.5, 2, 3 times. I've even earlier on this year, I was hitting trades back to back on gold in my signal room, where we caught almost every single day 4 or 5 times our risk. And that was insane. That was back in January of this year. So to me, I personally don't care too much about, if the win rate takes a hit. I rather have the risk reward ratio compensate for that. And that's where I feel like swing trading, the swing traders have technically, from what I've seen, I don't know about Alex's personal trading and how he does, but their win rate takes a bigger hit significantly. But again, the risk reward ratio drastically compensates for the win rate. And then, the amount of trades you're taking as well, scalpers, they take a shit ton of trades. Personally, I wouldn't be able to do that, right? If I take one position and it wins, I'm good for the day, right? So, Alex probably takes one trade every 3 days. I take one trade every night. You know what I mean? So, there's lots of pros and cons. It's up to the individual to really kind of sit down, look at them, and really see what works best for them.
Okay, you hit every single point on that response. That was top notch. Alex, now the ball's in your court. What do you think? You're gonna have to beat that. What do you think is the benefit of swing trading versus intraday trading?
Well, there's definitely benefits, but there's definitely also cons as well. I mean, I want to say one of the biggest cons, at least from like what I've seen from people's reactions to my style, is definitely the patience factor of it, because you definitely, like Raul said, like I personally aim for 2.5% a week, which is your 10% a month. So like you're not really gonna get a swing trade every single day. You can't catch 100, 150, 200 pips every single day. Like that's just not how the market works. Like my strategy or my style of trading is very simple. Like I don't have a course, something like that. I might come out with something like that later in the future, but it's just simply like I need all of the time frames to be in sync. I need the monthly to be bullish. I need the weekly to be bullish. I need the daily to be bullish. And then I'm entering on the 4-hour higher low. So if you have the monthly, weekly, and then daily bullish, and then the 4 hours bearish, you need to wait a day or 2 or 3, whatever the case is, for the 4 hour to give you that higher low, and then you just continue the trend with the full market. So I mean, the pro is that once you do get that 4 hour higher low, you just ride the full thing with the whole monthly, weekly, and then daily trend. So that is the pro, because once you're within that wave, you're basically doing nothing but entering at the next higher low, and it's just set and forget. The con would be basically waiting those 2, 3, 4, 5 days, whatever the case is, for the trade to make sense, and then waiting for it to hit your take profit. I've had many people within the learner as well that they enter the trade is 2, 3, 4, 5% in profit, and then they end up closing. And I'm like, why are you closing? You have all time frames in sync. It just simply makes no sense to close out the trade right now. You literally waited for all of this. Yeah. So, I mean, definitely pros when it comes to, once you get the hang of that patience part, you literally only find yourself taking trades that make sense. You completely eliminate everything. Your charts gets a lot cleaner, and then you're only riding the wave. There's no need to take that counter trend trade. Like scalpers, I know scalpers mainly only look at the 1 hour, 4 hour, but then they're probably shorting the 1 hour, 4 hour, but daily, weekly, monthly, they're all bullish. So they're kind of in a way counter trend trading if you're obviously looking at the bigger frames. But I personally like taking all the trades in sync, because it just makes sense, and your trade has more of a high probability of going in your direction in that area. But when it comes to risk to reward, I can definitely have 3, 4 like losing trades. That's fine. But when I enter those winning trades, literally one winning trade will get me out of all of those losers. If it takes a week, that's perfectly fine. It's not an issue. But I've built over time that patience factor that I don't need to trade every single day. Like, just because, like, I always put this analogy, like some people laugh or like whatever the case is, but it's like, let's say that, like, because obviously we're riding the wave in the market. So let's say we were to be surfers, right? And then basically just because you're not surfing, that doesn't mean you're not a surfer. So people think just because they're not in a trade or they're not involved in the market, they feel like they're not trading or they're not worthy of being a trader, whatever the case is. If there's not enough wind out there in the ocean to give you that nice wave to ride you to the shore, you're just not gonna, it's not worth going out there to get wet. You get what I mean? Same thing in the market. If I don't see a potential of a trade setup that is going to give me that whole wave to hit my take profit, I'm just not going to put my money at risk. It just simply makes no sense. So I don't mind sitting on the shore waiting for that nice wave to present itself. So I mean, it definitely takes patience, but when you get that wave, it's a nice long ride, man. Definitely.
Okay, that was well done too. Look, I want to do something really interesting. I want you guys to argue against your own position, which is basically like, Raul, if you can give 2 cons to intraday trading that sort of, that make that less desirable. And then Alex, if you could do the same for swing trading after.
Let me think about how I'm going to say this. A lot of people, everybody's going to be different, but, the con for, it's not really a con for me, but definitely one of the cons for day trading is that you have to test the probabilities of not just your system, but you have to test the probabilities of how you're going to be executing that position, how you're going to be looking to get in and out of the trades. You have to be constantly watching the chart. You have to be actively monitoring your trade, and you have to constantly execute your plan in terms of, you got to plan the trade, wait for the trade to actually set up, take the trade, and then you got to watch it. You got to come back at least every 30 minutes to an hour, because things could literally flip like that. That would be one con. You really got to dedicate that time to just watching the trade. And then the other con would be that you just simply don't win as much as scalpers do.
Now, when you said that wasn't a con for you, what did you mean by that?
I don't care personally if I take a loss of 2, 3, 4 trades in a row, as long as 1 or 2 positions make that back plus more, then, with me, I'm good. But, in my experience, a lot of people don't have that in them. I have a signal room and I'll call out some trades, and let's say I take 2 or 3 losses in a row back to back, but one person, or I call one trade that makes those losses back plus more. Some people, they've screwed up for themselves. They don't hold to the last target. Trading is something that's very subjective to the individual and how that individual's personality works. So how my personality works is, again, I don't care if I take 2, 3 losses in a row, as long as, the risk reward ratio compensates. And again, right, that's just been my experience off of trading over these last few years. To me, I've experienced that day trading doesn't really have the best win rate, or at least my system, right? But it's compensated by the risk reward ratios. And I typically just trade supply and demand. And, my second system is using the fibs for pullbacks.
Okay. So if I had to sum it up, it'd be basically that you like having a dedicated time for trading.
Yeah.
The win rate's not that attractive with intraday trading, but the risk and reward compensates for it.
Yeah.
But the con of it is that you do have to stay on the charts for that dedicated time. But if that's your personality, then it shouldn't be a big deal, right?
Yeah.
Okay. Good stuff, Alex. You want to go ahead and argue against swing trading and say what would be some negatives in terms of somebody that wanted to swing trade?
Definitely a big negative would be the patience pack, like the patience factor, bro. Like, people cannot not be trading for 4 or 5 days. Like, it's literally an issue. Like, there's been weeks where I don't trade for 5 full trading days. I do nothing. So it's just like, what in the fuck do I do within those 5 trading days, so it's just like, it's gotten to the point where I literally don't take trades if it doesn't make sense. Like, it's already been like my normal, but people at the beginning tend to struggle, because then, like how I said before, they almost feel like it's not fair, or that they're doing something wrong because they're not involved.
They feel like they're not being productive if they don't take a trade.
Yeah, they feel like they're not being productive. And then realistically, in this business, like, less is more when it comes to analyzing your charts, when it comes to taking the trade, when it comes to managing. Less is more when it comes to this, because you're the one in control. The market doesn't tell you to do anything. The market gives you a signal, and then you have to react based off of whatever the market shows you. So definitely the patience factor when it comes to swing trading. Like, you need to really understand, you need to accept your role. This is another analogy that I use, and they're all funny, bro, because like, they personally really helped me, man, and they struggled at the beginning. Let's say, for example, when I used to be working at Dunkin' Donuts, right? I was getting paid whatever, X amount the hour. And then when I used to work the morning. So when the mornings were booming, I felt productive because I was making coffee, I was handing out the donuts, fucking creating wraps, whatever the case is. So for those 2-3 hours in the morning rush, I felt productive. I felt like I was worth my $10 an hour, even though it was not $10 an hour. But whatever, you guys get what I mean. I felt like I was being paid for what I did. But then after that, I was 3, 4, 5 hours without doing anything. So within those 3, 4, 5 hours, what are you gonna do? You're gonna tell your boss, oh no, I didn't do nothing. I don't deserve making those $10 an hour. That's not the case. You're there. That's your role. Your role is to be there when somebody comes in through the door. Same thing as a trader. Your role as a trader is to take a trade whenever the trade is there. If there's no trade, you simply don't take the trade. That is your role. You need to accept what you're doing in this business. And that's something that people struggle a lot with, because they come in with this like 9 to 5 or 7 to 4, whatever the case. They come with this, the more I work, the more I should get. So they think that since they're sitting in front of the chart 5-6 hours at a time, that they should be given, or they should be compensated for something because they put in the work. And we all know this. The markets don't give a shit. They don't know you've been in front of the charts. They don't care. It's comes down to that simplicity. So definitely one, the patience part. And then another con that I would want to say is, I guess, they would both be patience, because then the other would be like resetting your mindset to be able to allow yourself to let that trade run for a week or two or whatever the case is. It's just like allowing yourself to accept that. So I guess 2 would be accepting the outcome, whether it takes a day or 2 or 3 or 4.
Now, Raul, there's a lot there that you guys have differences on, but there's probably a lot there that you guys also agree on. Would you agree that less is more, regardless of your system?
1000%. Trading is literally like 80% waiting, and then 10% execution, and then another 10% waiting.
Okay, I mean, let's go into that. So what do you think stops a lot of traders from having that patience to be able to wait? What are those like common factors that you see?
Inexperience, really. It's not determining the difference, not being able to identify the difference, being a high probability setup, a low probability setup, or maybe a setup that, the probability is about even. And also another factor, wanting to get in a trade, not feeling productive. Because I remember, a few years ago when I first started, if I wasn't in a trade, I felt like I wasn't doing anything. But nowadays, I see I'm taking way less trades, but the quality of the trade is so much better than the quality of any other trade. So nowadays, I'm starting to feel like I have no problem maybe putting my trade size to be a little bit heavier than normal, because the quality and the probability of that trade is so much higher. Some people also have the mindset that, oh, here's a double top, right? Everybody knows what a double top pattern is if you're a trader, right? This is what's going to happen. No, you're imposing your will on the market. Just because you see the pattern form doesn't mean it will happen. So you really have to wait for the right time to get in. And that's going to be subjective to the individual and the system they're trading. But like I said, it really comes down to just inexperience and not being able to identify high probability setups and just taking any type of trade. You know what I mean? And I don't know if you've heard of, how am I going to say this? It's kind of like that one guy, right, who you knew in high school who would hook up with every single girl, right? Doesn't matter, if she was attractive, if she wasn't attractive, he would hook up with every single girl, right? Versus that one guy who would really only go out with girls that he saw as like, that would bring value to his life, right? So you have to be very selective like that. And that's not just in trading, that's just with life in general. You have to be very selective of who you choose to be around you. And once you see that somebody isn't impacting your life in a positive way, if they're bringing bad vibes, if the energy around them, if they're bringing a bunch of drama, you need to get rid of that person, right? But if you can identify that person before investing time in them, then, it'll save you so much time. It'll save you so much of your good energy, if that's how you want to put it, right? So, being selective with the people that you let be around you and being selective with what types of trades that you're taking will definitely help with your learning curve for sure.
That makes a lot of sense. So like the common theme that I'm hearing is that the things that you do in your personal life and how you do things in your personal life affect your attitude and your personality
1000%,
on the charts. So if you're not selective in your daily life over the standards that you have, you're going to be the same on the charts.
Exactly. You're going to be sloppy.
Okay, done deal. I actually wanted to ask you about something that you said. You said, do not impose your will on the market. Yeah. And when traders tend to impose their will on the market, they tend to get exposed.
Yeah.
So you talk about some ways that the market exposes people's personalities to themselves. And then Alex, I want you to talk about this too, because I think swing trading exposes more about people than anything else.
Yeah, I mean, when it comes to trying to, impose your will on the market, it goes back to, looking at these basic market patterns. How we know, your double tops, head and shoulders, double bottoms, right? Which we all know are patterns that tend to get manipulated. Let's just say a trader sees a double top, they're kind of like, hey, I'm going to enter here. This is what is going to happen. The trade may go in their, the trade may go in their favor for a few minutes, a few pips, and then completely reverse again on them. And they're kind of wondering like, hey, what did I do wrong? When at the end of the day, they did nothing wrong, but they were just kind of imposing the will on their market, really expecting that win. Along with, the markets will expose, certain characteristics of who you are as a person. Like, let's say, you're waiting for a price to come back down to an area of supply and demand or support and resistance. Let's say it's come down to your level of support, right? And you decide to wait for an entry, right? So when people wait for price action signals versus taking trades closer to the level or at that area of support, right? Typically what happens is that the risk reward will suffer because again, price may move 5 pips, 10 pips, 15 pips in your favor, depending on, how much buying or selling pressure is at that area. So if that engulfing candlestick that you're waiting for is a 15 pip candlestick, and now you have a 35 pip stop loss instead of your initial 20 pip stop loss, right? Your risk reward is suffering, but you still take the trade. But then you see price come right back down and retest that level of support, giving you a smaller engulfing, but giving you that same confirmation, right? You could have had the stop loss you were expecting, but you were impulsive and you didn't want to miss out on that trade, which a lot of people actually, how do I say this? A lot of people, it's a fear of missing out on the market. It's simple. They don't want to miss out on the move. They're going to see, especially if you're in communities and stuff, you're going to say, oh, this guy caught this move, but I can't believe I missed it because I didn't get in because of the entry point, when really he should be patting himself on the back because he wasn't scared of missing out on that move. Right. So it'll expose a lot of characteristics about your personality if you're patient or not, as well. If you're somebody who, can't be disciplined, can't manage your risk, these are all very important characteristics that you need to know about yourself and breaking those bad habits.
Alex, you wanna piggyback off some of that?
Yeah, so I mean, I definitely feel like I mean, to me, it comes down to basically like people have like what it's called like a gambler's fallacy or whatever. So it's just like if this double top didn't work last time, it's gonna work this next time. Now you double up. Oh, if it didn't work this next time, third time's a charm, you triple up or whatever the case is. So like people's like ego and then like the greed get in the way of all of that stuff. And then simply because they think that they have some type of connection with the market, they're like, it has to go this way. It's the third time, fourth time. How can it not go the other way? So then people almost personalize the trade. They personalize the next move in the market because simply they feel attached. And then they're like, how can it not go against me? I've been wrong 3 times. The 4th time has to be right. How can it go wrong again? And then people just don't tend to understand the markets don't give a shit, bro. The markets don't know who none of us are. They don't care. We've been in front of the charts for 10 hours. They don't care about none of that stuff. So it's just like people need to really understand and really accept that you are not entitled to anything the market does. Just because the market presents something to you, you read it as an opportunity, but nothing else than that. So, I mean, my biggest thing is just gambler's fallacy. And then people think just because it hasn't happened 2 times, it has to happen the 3rd time, because it's like flipping a quarter. Yeah, you can flip a quarter 10 times in a row, and then 10 times in a row, it can literally be heads.
Again,
but
yeah, it's the
and
probabilities.
it could be head. It could be heads 11, 12, 13 times, but people will continuously be doubling out because like, how can it land on heads again? It's impossible. I have to be right. And then that's where just people, that's where people personalize everything, and it's just turn into,
people don't understand, the game of probabilities, right? You really have to identify what the probability of that specific trade is, right? And everybody's gonna have a different way of identifying the probability. But if you're not playing the probability game, then you're significantly lowering your odds of being successful in an industry where it's already hard enough. Along with that, people don't understand drawdown. They don't understand how drawdown works. People think that, you're going to be profitable every single month. And that's not the case. The market goes through different waves. People in the summer, you know what I mean? Everybody in the summer, really, their trading is going to take a hit just because of summer conditions. Banks are on holidays, people are on holidays, right? People don't really understand how drawdown works, and they think they're just going to be winning all the time. And they don't understand how win rate even works either. They track win rate, on a week-to-week basis, when you're supposed to track win rate on a month-to-month to month to quarter to quarter to quarter to year basis. That's how you get your solid win rate. You want to test your win rate not out of 10 trades, not out of 100 trades, but out of hundreds of positions that you take to determine that.
For me, it just basically comes down to like, if the big boys, which are like the big banks, if they're doing X and they're basing their results off of quarterly and yearly, why are you going to try to be that much different than them and create your own like strategy or your own wannabe thing that just because you think that you know what you're doing? No, I'm going to base my shit off the weekly. That's not going to fly. The big boys are the ones that move the markets. I try to be as close as to them as I could be. you know? So I feel like that's something that people need to accept. Just because you think you got an amazing 5-10 minute strategy, yeah, that's great, but don't base off your results off a week. Like not even the big boys managing billions, hundreds of millions of dollars, they don't do it. So why should you, you know?
And people they don't track their performance either. If you're not constantly tracking and seeking to improve, how are you ever going to improve and reach that state of consistent profitability, which, to be honest, you never really realize you're consistently profitable until weeks and months have gone by and you're like, oh shit, I actually made a return on my trading account last quarter. Oh shit, for half the year I've been profitable. That's when you start to realize that you're profitable. You don't realize that you're profitable just because you win, for a month, right? Because a trader could get lucky in that whole month he's profitable, right? You want to look at it from a quarter to quarter to quarter to quarter basis and really get the concrete evidence, if that's how you want to call it, of your system and how that works. And again, every individual is going to be very different. You really got to take this and make it a business. Why are you going to treat it as not a business?
So I think that seems to be like the biggest theme, and everything seems to go with that, is to treat this seriously. And if you're going to treat this seriously like a performance sport, obviously, Raul, you talk a lot about tracking. You talk a lot about the probabilistic nature of trading, which is really important for institutions. And now you're talking about this longer term perspective, quarter to quarter, as opposed to daily view. So it all kind of points to treating trading as a professional would in order to get those professional results, right?
Why wouldn't you?
I'm gonna give you an example right now. Literally last month, in July, I started that month in drawdown alone. I think I was down maybe 17, 18%, but by the end of the month, I had brought the account all the way back up from that 17% drawdown to a 10% gain, right? So you could really see how your P&L definitely fluctuates depending on, what type of system, what type of risk management you're using. So I try not letting losses get to me because I play the game of probabilities. This is my system, supply, demand. If I stick to it, I know in the long term, I'm going to be profitable. It's fairly simple.
Simple, yes. Not easy.
That's simple, but not easy. Definitely. It's a lot of simple concepts just put together.
That's for sure. So we talked about like what traders need to do in order, or what some of the traders struggled with the most and why they couldn't stay in some trades and be patient in between trades and all this other stuff. Now, you both have two different trading strategies. And I think questions are important to kind of keep yourself on track. Like a question would be, has price broken my zone, for example? It's a question to be able to gauge if the trade's going your way or not. Yep. What kinds of questions would you guys ask yourselves to determine if the trade is worth closing or if the trade is worth holding?
Momentum, volume, price action, and where price is trading, because I look for specific price action signals at specific levels where I see that there's a lot of buying and selling pressure, right? Because if I see that price has broken above an area of resistance where I saw previously, again, if you look left, structure will always leave some form of clues for you to base your next trade off of, right? If I see that price is broken above that level and has made new highs, what's the probability of price coming back down to test that area that it's tried so hard to break out of? I would say it's fairly high. So I'm going to wait for price to come back down to that level and look for any signs of momentum slowing down, for volume to slow down, and for that, maybe even that price action signal, depending how aggressive I want to take the trade. And again, depending on how aggressive I want to take the trade will determine, will be based off of the probability that the trade is going to go in my favor, right? So for me to continue to hold the trade, really, it all depends on price action, and it all depends on momentum and timing. Timing is also super important as well. If I see that we're already near the end of the session and price is starting to slow down, doesn't really look like it'll continue, right? Then I may close a position depending on, the risk reward ratio that I'm up. Because if I'm break even, I'm going to continue to hold my position to the next session, right? Because again, the trade is still valid until my stop loss gets hit. My stop loss is placed in a specific area where if price hits that stop loss, and the trade is no longer valid because, price is completely going against me. Right. And it's starting to break all my areas where I confirm that, hey, if we stay above this area, then we're most likely going to continue to travel up, versus if we break under this area, the probability is a lot higher for price to continue to go down versus, come back up and go in my direction, which that's another thing that people struggle to do is, once they take the trade, they tend to adjust stop losses. Now, initially, if you take a trade and you adjust your stop loss because you notice it wasn't in the right area to begin with, that's fine. But when you start modifying the stop loss again and again and again and again, and you're just lowering your position more and more and more, praying that the trade will come back into your favor and continuing to go in your favor, it's a very gambler type of mindset, and you're kind of just hoping at that point that the trade will recover. When again, price doesn't give a shit. The market doesn't care who you are. On the contrary, it wants to take your money.
That we can agree on that one. So
Yeah.
Alex, I'm going to bounce the question over to you. Raul, I appreciate the full length answer, because I think you hit a lot of really important points on. I think the biggest thing that I took away was basically, as long as you understand your strategy and the different confirmations, and I guess what people would say confluences that are there, and then those confluences get broken, then you can identify those as they get broken and ask yourself, should I still be in the trade? So Alex, what kind of questions would you ask yourself to say, because I know swing trading is a different set of skills. So you have to ask yourself, is the market going to reverse? Is it not going to reverse? Could you speak on that?
Yeah, well, I mean, like my first question that I always ask myself, I mean, you can literally check it on my YouTube. Like it's always there, because I always write down the confluence whenever I take down a trade. The first thing is, what is the market doing? Are all time frames in sync? Is the weekly, daily, 4 hour, are they in sync? If they're not in sync, then everything after that doesn't make any sense. So if the market is not in sync, I'm not even going to take the trade. The second thing that I ask myself, is this trade worth the risk? Am I risking $1 to gain a minimum of 2? That's, your basic trade setup. Following with what Raul said, is that trade at an area where if it breaks the level, I am completely wrong, and then I react and adapt to what the market shows me. And then say I'm buying at a support level, and then the daily has completely engulfed under that level. I'm no longer looking for buys. I simply wait for the daily to come back, retest that previous structure, use it as resistance, and then short the downside. So it's just simply, is this at an area where it is going to continue bullish, or if it goes against me, I am 100% wrong, and then I simply change my bias to bearish. I'm not stuck on one bias. I don't want to only go long. I don't give a shit. I want to make money, and if the trade makes sense, buying at this area, great. If I was wrong, then I simply wait for the lower high, and then the trade now makes sense to sell. I'm not in the business to be right. I'm in the business to make money. So definitely one of the questions would be, are all my time frames in sync? Is the trade worth the risk to reward? Am I buying at a level where if I am wrong, I am completely wrong, and I change my bias 100%? I buy at a support level. If I get a 4 hour daily bearish engulfing, I literally wait for the next lower high, and now I short it, because now the trend has changed, whether it be on the 4 hour or the daily. And then the next question I would ask myself, is this trade worth, or is this trade going to give me my 2.5% a week? If this trade is not going to give me my 2.5% a week, I don't take it. There's just simply no need, because I'm not trying to force a trader. I'm not trying to be right, or I'm not trying to be involved. I'm only going to take a trade if it's going to give me that 2.5% a week. So I get my 10% a month, and then I do what I keep doing. So it's just really comes down to that. That's probably one of the biggest, what are all the time frames in sync, and then is this trade going to give me that 2.5? If it's not going to give me that 2.5, not taking.
I mean, I think what's so important about this conversation is that there's different kinds of traders at home. And then I think people have a problem with flip-flopping strategies when they stop working. And I think it's important to realize that you can be profitable regardless of what strategy that you're using or employing, simply because as long as you stick to that strategy.
Yeah.
Do you guys agree with that, or?
100%, because some strategies can only win 30% of the time, but they're still profitable.
Yeah, like my whole thing is like, we enter winning streaks, and then we enter losing streaks. So like people will end, like, let's say you start off with X strategy. It doesn't matter. Let's say you start off with Raul's, mine, anybody's. Let's say you start off with the losing strategy. So let's say that it's a 60-40. You lose 60% of the 6 trades, and then you win 4 trades out of 10 trades, right? So out of 10 trades, you lose 6, and then you win 4. Let's say with this strategy, you start off with losing 6 trades in a row. By your 6th trade, your psychology is out the window. You probably blew your account because you're not using risk management. And then there you start seeking a new strategy. You're trying to change it up. But then little do you know that you were about to enter your 4 winning trades that then we're going to make your money back. And then that's where the whole profitability is with the risk to reward. Or it might be the other way. It might be the other way around. You might enter the 4 winning trades first, and then you have the 6 losing trades. And then you're like, wow, this strategy was good at the beginning, but now it's a piece of crap. I have to change it up. So nobody really holds it throughout those whole period of the 10 trades. And then as soon as they enter that minor drawdown or that minor losing or whatever the case, they try to change and find something different to tweak it to make it better. But there's no tweaking. It's just you got to hold it throughout those losers and then be normal with the winners. It really comes down to this. Like, if you want to trade, you can't go throw a party. You can't be happy. You want to trade, well, you thought the trade was worth it, so that's why you took it. If you lost the trade, you only lost X percentage. That's why you risked X percentage. So if you lost, you're okay with the loss because you calculated it. And then if you win, well, that's what you expected because that's why you took the trade. Why are you going to be happy if you win? So that's why, look at Raul's face. This guy's like always serious. He wins a trade. This guy does not give a shit.
Yeah,
I win a trade. I literally just keep going about my day. It's just, that's why I took the trade. I took the trade to win. And if I lost, that's why I calculated the loss. That's really that simple.
Raul, could you, my bad, I'm gonna let you get to your point real quick, but could you also talk about losing streaks, and could you talk about handling losing streaks and some methods that you use to get yourself back on track?
I mean, everybody's really gonna handle losing streaks very differently. Nowadays, I find me, being able to cope with a losing streak a little bit more difficult because a lot of people are taking my same trades, and trading for myself, by myself and not having anybody look at my trades. It was a lot easier to cope with the losing streaks. I take a loss. Oh, well, I'm going to go to the gym. I'm going to go to the pool. I'm going to watch a movie. I'll come back later when my mind is fresh and review, see if the loss was normal or see if I fucked up somewhere. Nowadays, it's a little bit more difficult because I have the pressure of hundreds of people looking at my specific trades, judging the trades and giving me feedback on their opinion, which I do not need about my specific trade because I know my system that I've been trading for years. I wouldn't be in the position that I am today, if the system or I didn't trust in my own trading, right? And trading your own capital versus trading somebody else's capital versus trading and calling your trades out in a chat room, they're all different ball games. The easiest is when you're trading for yourself by yourself. When you start trading other people's capitals, you have investors calling you, yo, why are we down 3-4%? And then when you're trading a signal, like, yo, we're down 3-4 trades, what's going on, right? And then you have to explain yourself. So it's a whole different ball game. I just want the individual to kind of put themselves in a position where they can kind of look at it, right, from a perspective of, okay, how does this guy feel, right, that he just took 3 losses in a row and all these people are looking at his trades. Imagine the pressure of you trading alone. You already have enough pressure because you don't want to lose money. Now imagine trading in front of hundreds of people, or imagine trading hundreds of thousands of other people's dollars, right? So everyone's going to be in a very different position. You're going to handle drawdown very differently, but I just kind of try and move on with my day as best as possible and do things that bring up my mood, do things that make me happy. And I tend to stay away until I am required to come back, review, and look for the next trade. You're only as really, at the end of the day, you're only really as good as your next day, as your next trade. Because if you look back to before summer started, right, I was the first individual to make 176K on a funded account platform that nobody has broken that record. And I had the biggest payout, right? And then the summer started, and that's when my trading really started to go sideways, more break even, more losing days than I would with outside of summer conditions. And you kind of just see how everything changes from market condition to market condition, during the different times of the year. So everyone is going to handle things very differently, especially if you have, problems with friends, problems with families, maybe problems with a girlfriend or a wife, mental health, everything ties into that together. So when it comes down to me in specific, though, to answer your question, I just try and do things that bring up my mood. Like I just said, I like to do things to remind myself, like, hey, I'm a 22-year-old. I have $1.7 million in cars. I'm about to live in a $1.4 million house. Nobody has beaten my FTMO record. I currently hold the record for the biggest payout. I do things to bring up my mood, my confidence, as much as possible to kind of get ready to attack the markets again.
Talk your shit, Raul.
Yeah, definitely, bro.
That's what I want to hear, bro.
Yeah, bro. It definitely puts pressure on you, bro. Like it's
for sure. And I think that everybody who's listening at home needs to also take that away. Like, you guys just heard a long form conversation between us. You guys know that these are guys. You know what I'm saying? Like, they have more discipline than the average person, which is why they're in the position that they are to succeed. But that pressure already is what it is without the unnecessary commentary. And so I hope that this long form conversation will kind of help clear that air and be like, okay, everyone's fallible. We're all human.
Yeah, we're humans at the end of the day.
So
You know, people just put us on a pedestal because of where we are in life.
Yeah, it definitely takes a toll on you. Like I go live every single day within the Learn and Earn, and then just I literally see the people looking at me every single morning, and it's just like, guys, if there's no trades or there's nothing clean for the next 2-3 days, like sorry guys, like I can't do nothing about it. So I literally have to type in the chat like, guys, we're simply waiting for this to get to this area. I'm constantly updating every couple hours because like I cannot move the market. So that's where people start to get impatient, and that's where I realized that the most like factor where people tend to fail is they just simply don't want to wait. They want it now, and that's with everything. They want to get my $10,000 days. Yeah, they want to get my $10,000 days. They want to get it now. They want to get.
They don't want to go through the struggle
payouts.
that we go through, that we've gone through over the last few years. Look at my student Chow, right? I have a student who took my online course when he was 15 years old, right? He dedicated literally his life. He dropped out of physical school, enrolled in online school, and dedicated his life to learn how to trade. And now it's starting to pay off for him. He's only 18 and he just had his first $25,000 week, and he's 18 years old. Imagine that kid where he could be 3 years from now. That's the mindset that I gave to him that's putting him in that position now. Imagine where you could be 3 years from now, 5 years from now. That's what I'm looking at. That's what gives me more patience, because literally 5 years ago, pretty much when I started, right, I was only envisioning the things that I wanted. I had my goals, and I said, okay, I don't want it this year. I want it when the time is right. Yeah. And by the time, you blink, you look back and like, oh, fuck, 4 years have flew by. You know what I mean? Like,
for sure.
That's when people ask me like, oh, how does it feel to be where you are today? Because, I'm not going to lie, for my age, I have accomplished a lot, but it doesn't really feel like much. It feels like what I've worked for. And it kind of just feels like it's another day to me now, because these are things that I've worked for, and these are things that I knew I wanted to accomplish. So in the moment when I first got like my first supercar, right? It's like, wow, it's great. But then, you get used to it because you've had it. You've already accomplished it. You're like, what's
the new normal? It's the new normal.
You know that saying where they say the destination isn't that exciting, but the journey is?
It's the journey. Yep, 100%. 100%.
Y'all heard it.
Yeah, 100%, right. It's just like, I don't want to say like once you get there, it's like, oh fuck, now what? But like, it's kind of like once you get there, like damn, like those struggles, those kind of things, like that was kind of fun. I mean, yeah, you are excited.
Who you are.
Yeah,
you know what I mean?
Yeah,
it's fun from the other side for damn sure.
That's why, like, I mean, me and Raul, we're always like pushing each other. Like whenever he slacks off, like I push him, like, yo, let's go get on your shit. He's always pushing me. So like that consistently like gives you like something to work forward. So you enter like now a new journey of whatever it is that you're gonna do. You get me? So you're always working towards something.
That's why you gotta surround yourself with people who have the same mindset as you, who give you good vibes. You got to have that loyalty with people, and any garbage people that you have in your life, you have to get rid of. That's not going to bring you anywhere. They're only going to take you down.
Okay, 100%. So let's take all this wisdom and let's pass it on to some actionable steps. Let's say there's some folks at home that are looking at the trading year ahead. We have another trading year ahead of us, or half a year ahead of us, 2 quarters. And they're saying, okay, I want to make some improvements. They're already losing. They already don't, they're lost, whatever it is. What are some things they can start to do to get themselves ready for when that volatility comes back into the markets?
First, most important, understand that trading is a game of probabilities. You're not going to win every single day, right? But you have to come to the markets every single day. You got to show up. You got to seek to improve. You have to track your performance, and you have to journal so you can improve later on to see if you're making any mistakes within your system. And something that I've realized when it comes to trading is, you want to make big money, you're going to need to trade big money. It's as simple as that, because at the end of the day, Roy could be risking 1% a trade. I could be risking 1% a trade. He might make 20% 1 month. I might make 10% 1 month. Sure, he had a bigger percentage return, but that, depending on the account balance, his 20% might only be, let's leave it at 20 grand, where, my 10% was $400,000, right? So look at the percentage return and then look to seek more capital later on, especially nowadays with all these funded companies come on, right? You could buy a challenge from every single company, right? Let's just say each company has a max of 400K. Let's say you buy, 5 different challenges of 400K, and you put all of those challenges on a trade copier, instead of managing 400K, you're now managing almost a few million, and you're keeping 70, 80% of the profits from all of those companies. Like, you have to use your brain. Reinvest all that money into your own personal funds on your own personal brokerage, whatever platform that you want to use, and level up. Remove the idea of flipping accounts, because that shit is not going to get you anywhere. And I say that so much because I was stuck on flipping the accounts over a year, because that's the same bullshit that I was sold on.
Funding companies, definitely the way to go, bro. I mean, it like the leverage is ridiculous. Like, it's
For
like
somebody who's undercapitalized, funding companies will give you the opportunity.
it's ridiculous. It's literally ridiculous.
If you don't have, a few $100,000 to deposit, okay, just deposit, where you could deposit, focus on that percentage return, and then grab that same skill set. Once you've proven to yourself that you're consistently profitable, move it onto the funding companies. Like I said, buy multiple accounts from different companies, put them on a trade copier, and just trade. Do the same shit you were doing. Hey, your 10% might now turn to, a $40,000 gain instead of a $4,000 gain, maybe even a $400,000 gain. There's different levels. You got to start climbing the ladder somehow. And that's just the smartest route. And, because when I started trading, I didn't even know what a funding company was. I didn't even knew that there were funding companies, but nowadays there's so many,
Sure.
There's really no excuse. It's not that it's getting easier, but there's more tools and resources available for people nowadays.
Okay, well, y'all heard it. Get to work. If you're undercapitalized, which seems to be one of the largest problems in trading, then there's steps that you can take to get yourself funded. And Raul, the trade copier idea might be the most genius thing I've heard in a long time.
Yeah, bro. I mean, it's true. Yeah, I mean, it's true. Look at all these funding companies, you buy every company is going to have different limits on how much you can manage with them, right? But you buy, let's just say, you go from, your top 3 funding companies, right? Let's say all of them offer a maximum of, 200K, which is not the case. It's more than that. But let's just say, all of them offer a maximum of 200K. Now, instead of managing just 200K, you're managing 600 grand. You just put them on a trade copier. You make 10%. Hey, you just made $60,000. Where's my cut? Is what you got to email that funding company. I want my cut.
For sure. That's 70-30, or depending on
depending on company,
So that's awesome, guys. Do you guys have any last words? I know that we're cutting it a little bit over an hour here. Do you guys have anything that you guys want to say to the folks at home in terms of their focus, in terms of their prioritization, in terms of the things that they need to move forward in their trading?
I would say just focus on the probabilities game, always seek to improve, and don't look at it as a next month problem. Look at it as where can I be within the next few years if I just stay focused.
Definitely. I mean, for me, it would be focus on your own journey. We're all on a different path. We all have different types of, goals and things we want to achieve. And focus on trades that make sense. Don't feel that you need to take a trade just to feel that you're involved. Only take a trade that makes sense and that is worth putting your money at risk. Like, I wasn't going to put my hard-earned hours at risk on the trade just because I wanted to feel involved. I was only going to put my hard-earned hours of risk on a trade that I felt was going to give me money towards the future. So, I mean, it's only take trades that make sense, focus on your own path, and never, ever give up, bro. That's definitely the number
only
one.
Traders that fail are the ones that quit.
You can't fail if you don't quit. You just keep going. You're going to come out somewhere.
Alex and Raul, thank you guys for stopping by the Expert Trader podcast. Thank you guys for a very enlightening conversation. We saw a dichotomy between intraday traders, swing trading. We saw pros and cons, and we talked a lot about the psychological makeup of traders and why they can and can't succeed. Guys, I appreciate you for stopping by the Expert Trader podcast series. Let them know your IG name real quick so they can find you.
LamboRaul.
FXAlex G.
And at FXAlex G. Great to have you guys on the Expert Trader podcast.
Appreciate you, bro. Thanks for having us.
Take it easy, bro.